Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ed Carson here with a look at today's action where we saw strong gains in the market. But Ed, one day up does not a confirmed rally make.
No, it was a nice day, and that's great. You need but you need a lot more than one day. But we are going to take a look at a few stocks that are setting up, acting well: Exxon Mobil, Dollar General, and Eli Lilly.
All right, well, we'll analyze those three stocks, but first let's take a look at the major indexes. The Nasdaq today up about 2.5%. Same for the S&P 500. We had the Dow up 2.2% and the Russell 2000 up 1.8%. So a strong move here today. A couple of days up now in a row today, but a notable power, I think, behind today's move. So getting in some investors out there perhaps excited with the Nasdaq back above that 11,000 level. So that's encouraging. So while we might be headed in the right direction, what we know from history is that bear markets of this severity could take a while to play out.
It could take a long time to play out, and we know that in history, the best percentage gains in history are in bear markets or corrections. And you can this was not anywhere near the biggest gains in history, but you can just look along this bear market that we've had. There's plenty of days that have been stronger along the way. And sometimes we can, maybe we'll have a tradable rally, maybe, that we rise up to the 50-day line and then hit resistance. Maybe we fizzle out right here. Maybe this is it. Maybe we really do go here. We do have Fed Chief Jerome Powell tomorrow. I mean, I don't know if he'll say anything new, but in an environment of high inflation, big rate hikes, recession risks, it doesn't feel like the right environment. At some point, the market will price it in and see the light at the end of the tunnel. But at least right now, the risks are really weighted to the downside. And again, if you're going to have a long rally, waiting a few extra days isn't going to make that much of a difference. You'll have lots of opportunities. But if you jump in early and we reverse lower, then you wish you hadn't.
And there's a lot of different scenarios that could play out from here. One could be, short-lived rallies and just a really choppy environment. Like you said, maybe a little bit more of a tradable rally. We don't know exactly what hand we will be dealt, but that's why we analyze the market day by day and look at history to see where the odds might be most in our favor to start dipping our toe back in the water, because as has been said by the team, the goal isn't to get in, right at the lows or the first day of strength in a big rally. It's to get in when that risk reward ratio is, more favorable, which we're not quite there yet.
Yeah, and in a couple of days we could, assuming we don't undercut the lows from last week, we could have a follow-through day that confirms a new rally. That would be a nice initial step. Maybe even we could get above things like the 21-day line. That would be something, and maybe then you could tiptoe into the market. But even then, I don't think there's no need to rush into the market. Just one, you have to be skeptical, and also there's not a lot of things to buy. We're going to look at a few stocks that are doing pretty well, but there's not that many that look that good.
Yeah, exactly. Some good context there. So before we move on, just one more note on the follow-through day, confirming a rally, because at this point now, we've had a couple of failed follow-through days. And, this is something that I get questions about. Well, you called follow-through day here or there. Well, they're not all going to work, which is why we go in slow. We still are cautious. And at this stage, the odds are a little more likely that we could see a failed follow-through day, but we have to walk a tightrope of what we think could happen and what will happen, and being flexible either way.
Yeah, flexibility is absolutely key.
Okay, moving on. Let's just breeze through the other index charts here. Let's look at the S&P 500. And it looks like, let's see here. I don't know. Maybe this isn't updating here. But anyway, it was a nice move for the S&P today, too. It's now just shy of the 3,800 level. And let's also take a look at the Dow. Here's 0DJIA. I'll pull up the DIA ETF here. You can see bouncing higher today, getting back above the 30,000 psychological level, the index that is this ETF back above 300. And then the IWM ETF also trying to move higher after a pretty sharp drop recently in the last 2 weeks. So last week down 7.5%, the week before that reversing lower by about 4.5%. So we'll have to see if this can continue, or if the headlines later this week might signal more market weakness. But until that point, we will just be open to the signs that we see in the market each and every day and adjust our thesis from there. So let's take a look at the 10-year Treasury yields. Ed, here's 0T and X on MarketSmith. So up about 2% today after a little pullback towards the end of last week, moving higher once again.
Yeah, so we hit an 11-year high last week, pulled back a little bit, still was up for the week. There's definitely a trend higher. The uptrend is still intact, just like the downtrend in the market is intact. So, there was a little bit of a pullback a few weeks ago, but that didn't last. That just offered another chance for people who were buying, basically playing the higher yields.
Okay, well, let's take a look at some stocks that are looking promising for the moment. Here's Exxon Mobil. After triggering a pretty decisive sell signal last week, or multiple sell signals actually, a round trip of a big double-digit gain and a very decisive break of the 10-week line, the first of which in this move since the beginning of the year. It's now rebounding, so up over 6% to kick off this short trading week, and now it's right back at that 50-day line.
Yeah, so it's back above the 50-day line, back above the old buy point. It's hard to say if you'd really want to count that still valid given the round trip and sort of that decisive break. So, I mean, could you play this? Sure. It's a very steep downtrend or bounce off of that. This is one of the stronger looking energy stocks. Let's say it held up well. I mean, even leading stocks, often the best we're seeing is stocks that round tripped gains as opposed to collapsing 30%.
Right.
So the fact that this is close to the prior highs, is relative. There's not many good looking charts out there. I mean, this is one of the better ones in that regard, but nice rebound here. Their diversified mix of, crude oil, natural gas, refining, can provide a little bit of stability. Obviously, won't prevent those big sell-offs like we saw last week.
Yeah, and exceptionally strong volume coming in on the selling as well, Ed. To me, this seems like, of course, it could go straight back up past the 100 level, but it seems more likely that this stock needs more time to build a full-on base and set up again, digest what's happened. That
at the very least,
better opportunity.
I'm sorry, I didn't mean to jump on you, but at the very least move sideways and then rebound from the 50-day line,
right?
Providing an early entry. But yeah, that would probably make a lot of sense because going straight up wouldn't look normal. I mean, it could happen if energy prices want to spike higher, but that would be very unusual.
Yeah, let's see. At the very least, if it can trade sideways here for a little bit, maybe a new base needs to form. We'll be on the lookout for that. And next on our list, let's take a look at Eli Lilly, LLY, which is at a key level, or multiple key levels, I'd say, not only right around that 50-day, 10-week line, but also a round psychological number at 300, which also coincides with a prior early entry, Ed.
Yeah, you're right. I wasn't even noticing that early entry, but there you go. It's right there. A lot of trading was at that level. You could probably do a downward sloping trend line that it isn't at yet, but like if, say, you took it from the highs here, you could probably get it to come down to somewhere around 306 or something. So I'm just sort of guessing where that, be. And so, this is still holding up reasonably well. You can see the relative strength line is strong. I didn't mention that Exxon, but Exxon, I'm sure, right up there. The RS line has been moving higher. That's what you're looking for. The charts won't always look the best. If you can find stocks that have RS lines that are hitting new highs, the stocks are at or near their 50-day lines, these are the kind of stocks you really want to be watching because, yes, if the conditions do improve and we have a real uptrend, these might be the kind of stocks that lead.
Right. And I think between Exxon and Eli Lilly, it also shows different looking charts, very different industry groups, obviously, but some lessons in the charts as well, in addition to keeping them on your watch list for me, would be looking for early entries. So here with Eli Lilly, if you waited to the breakout, you would have to immediately be on defense instead of getting an opportunity to be on offense and to lock in a quick gain. So being quick on the trigger, being wary of breakouts. In oil and gas, we have seen those breakouts work, but with Exxon, that breakout ultimately had a big round trip. So getting more comfortable if you are going to put some money to work in this market, make sure you are locking in profits when you have them.
And that's a reflection of how the market, it's not just the stocks, the market is having these very brief rallies. They run up for 2 or 3 weeks at best and then roll over. So in that situation, if you wait 2 or 3 weeks for a breakout, chances are the market is rolling over. So you just have to think about what the market environment is. And if you don't like that, if you don't want to take partial profits, you don't want to do early entries, then you should, there's a good reason to be on the sideline anyway, but that's another reason. It's not a very good market. That's for sure.
It's very, very, very tricky. Okay, let's take a look at Dollar General DG. This is another one of those funky looking cup with handles. We were looking at Dollar Tree in recent weeks as well, with a 1 week at the bottom of the base or near the bottom of the base, a sharp drop, then a sharp move higher the following week, based on, down on the target news, then up on positive outlook for these discount retailers. But at any rate, we are seeing a cup with handle base with a relative strength line blue dot, underscoring that short-term price outperformance versus the S&P 500. And then going over to the daily chart, a nice gain of 3.4% today. Did come in light volume, but really constructive, I think, to see the last couple of days really tight right around that 50-day line, and especially strong in the context of the market that we are in. And Ed, this seems like a watch list worthy stock.
Definitely is. And, you can say that some of the negatives about consumer spending and excess inventory might benefit Dollar General. It benefits Ollie's. So to a certain extent, this is a good environment, at least not a bad environment for Dollar General, because people might, in that regard. There's definitely the cup with handle breakout. So it got close to that buy point around 240, 240.07, but there's a downward sloping trend line you could run from the right there, or even from the top. It'd pretty much be the same thing. And then just one other little interesting aspect is that if you run it right from where the 50-day line is now and you run it to the left, it's basically at the 2 prior buy points that we had, sort of in that area. So
a lot of trading action happening underneath that area.
Exactly. And so it's just interesting in that regard. At this point, you might as well wait for the $1 or so to get above 240. And then again, you don't feel compelled to buy. And you can say, you know what, I like this stock, I like the action, but I'm not going to get into it because the market action is not fine. And that is fine. Okay. There's always going to be a stock, or there's always going to be some stocks that rally, early or in a bad market. And, the odds are low that you'll pick the right one. But this is definitely one to be watching for sure.
It is. And I think I like that draw the line action even better on the weekly.
Yeah, you're right.
Because it goes back even further. So yeah, it seems like a pretty significant level around that 240 area. So we'll have to see if it can conquer that. But on the watch list, and maybe put some money to work. But at the very least, I think, Ed, right now, even if you do see watch list stocks become actionable, like you said, that doesn't mean you have to take action, because they could set up again, especially if the market continues to do well. Those high RS stocks might give you another chance if the market continues to strengthen.
Yeah. And look, if you're the type that really wants to jump in early, and if you do that, just remember, you need to be able to jump out even faster. Don't jump in early and then stand your ground if the market rolls back. So you have to know what your trading style is. If you like going in quickly, you have to be able to run back backwards very fast too.
Yes, it's so true, Ed. Got to know your personality as a trader, and hopefully this market in 2022, even though it's been so tough, I think that there have been so many learning opportunities along the way, because I feel like it's markets like this that make you even better as a trader. I know this is something that you've said. You can make a lot of mistakes in a really hot, easy, bull run, but when times get tough, it forces you to really refine your rules, your risk management skills, and your stock picking skills, your market timing skills. So I think that this time, the silver lining is that I think collectively those in our audience who have been sticking with us have really grown their skills as traders this year.
Yeah, I mean, 2020 is not usual, but hopefully we have a strong market later this year or down the road, and you can take advantage. If you can, really take advantage and leverage those skills in a good market, yeah, you can generate big gains pretty quickly.
All right. So yes, at the end of the day, we got to stay positive. So I think that's a great note to end on, Ed. Thanks as always for your analysis, and thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So we hope you join us. Investors.com/IBD Live. And coming up on Friday, Jim Ropel will be joining us on the show. He's a longtime trader and a student of Bill O'Neill and the Can Slim method, has a growth stock mentor program, and I'm really looking forward to having him on the show. We've had him on the podcast, so it'll be great to get him on the live show. So we have that to look forward to on Friday. Thanks, everyone. We will see you right back here tomorrow.